Media reports have indicated that M&M may be looking to enhance its footprint in the defence space by acquiring a substantial stake in defence major Pipavav Defence. Though, of course, Pipavav Defence has denied that news. But we're trying to analyse what a potential deal could look like for both companies. To do that, we have with us Varinder Bansal analysing the deal. Varinder, if this transaction were to take place, it's a reported one and Pipavav has said, no, it's not happening. But if it were to, would it benefit both companies? How would it work?
Well, I'll tell you, this is not for the first time we are hearing, an acquisition news coming on Pipavav.
Okay.
Even Mr. Nikhil Gandhi himself, I don't know how many times in the past, 2, 3, 5 times, he has said that he is in talks with a strategic partner. L&T name was also, there, which he mentioned, but nothing has happened at least in the last 4 or 5 years. Now this noise is getting louder, and the announcement coming on basically suggests that they have not entered into any negotiation. That doesn't mean that the deal may or may not happen. But importantly, the reports we are suggesting is that M&M will acquire stake that will happen in 3 stages.
Yeah.
Currently, the promoters Nikhil Gandhi and Bhavesh Gandhi own 45% stake in the company. The 3-step will lead to an open offer eventually, where after these 3 steps, M&M and the promoters of Pipavav will have 30% each. Now, important is why Pipavav wants to sell. The important thing is that this company has an enterprise value of nearly 12,000 crore, market cap of nearly 5,500 crore, but a debt of nearly 7,000 crore. You will just see on the financials since last 5-6 years, they have created a good assets. I myself have visited that, the Pipavav plant. So it's a great asset what they have built. But the important thing is that the finances or the numbers have not been coming in the last 5 or 6 years. The bigger reason is the finance cost. The company does an EBITDA. The company reports an EBITDA of nearly 625 crore last year, but the profit was only 2.5 crore. That was because of the huge finance cost of 477 crore, which has been increasing since last 5 years. So they have created an asset. Actually, they are the only private company to get license and contracts to build warships for the Indian Navy.
So it is a unique asset.
It is
but
a unique
it's crippled by heavy debt and therefore heavy financing costs,
exactly.
is what you're saying.
Exactly. They have a JV with Mazgaon Deck. They say that the order book right now stands around 9,000 crore, and they have bid for 30,000 crore more orders, which will potentially come into defense. And if you look at the presentation, they are telling us that these are the huge opportunities. And Nikhil Gandhi believes that it could be 5 to 10 billion of opportunity going ahead. But the problem is that on that asset, it's hugely funded by debt. So they want to get an investor so that that debt goes away. The order book moves up. The finances get in shape. M&M clearly, Mr. Mahindra has told for a while now that they are very aggressive on that, and they really want to go ahead. Whether he want to foray into defense via Pipavav, that is a big question.
But he's already in defense. The question is, does he want to get into warship building via Pipavav or not? Is the point that you're trying to raise,
whether that is the only asset which he wants to go ahead with, or whether the greenfield may take less investment, or whether he want to go via Pipavav.
Fair enough. Let's put that question to an expert for an expert view on this proposed rumored deal, if I may call it that, and potential M&A in the defense space, given that it's so hot nowadays. Joining us is Ambar Dubey, partner and head of aerospace and defense at KPMG. Ambar, I know that Pipavav has denied it, as we've already put it out, and I know this is only rumored. I'm not asking you to comment on any financials or anything like this, but can you give us a qualitative comment on what a sort of company like M&M would see in a company like Pipavav, and whether, this is a greenfield route or a acquisition route best?
Thanks, Menka. I think we all are very clear about how the defense sector is opening up. We have a new minister.
Sure.
There's a lot of talk about Make in India, and not to forget this recent Delhi elections. I think all these add up to a situation where the government is going to be making long-term changes.
Sure.
The Defense Minister, Mr. Parikar, has already been speaking about revising the entire defense procurement procedure, the DPP as we call it. So I think these are the things which are creating a lot of buzz in the market. A lot of conversations were already happening right from the last 7-8 months when the BJP government first came up with this 26-49 and 74 and 100% FDI thing. FDI is the biggest elephant in the room. If this gets sorted out, we'll see many more deals. Coming specifically about Mahindras, they are very strong presence on the land systems, and in aviation also they made some acquisitions in Australia, which they're planning to now bring to India. And I guess naval is the one which was a missing link. So I think it makes sense for them. It sort of completes the portfolio.
At this price, because it's a company that has a huge amount of debt,
Yeah, that's true. Because see, we are all punting for the next 20 years because most of these orders, the huge orders expected for submarines, about 50,000 crores. That's almost about $8 billion. And plus, on top of that, there are ships, frigates, corvettes, minesweepers. There are lots of things coming up. The Navy, as you know, traditionally has been sort of a laggard with the people allege that it's got a stepmotherly treatment. The budget allocations are low, and that led to some of those unfortunate incidents. Even the first ever resignation by a sitting naval chief. So I think there's a lot of correction overdue, and that's where qualitatively we see a lot of opportunities for people like Mahindra's.
So you see compelling factors in this, Ambar. I'm going to ask you a couple of questions on whether M&M should approach this space, which is the maritime or the warship space, so to speak, or the naval space as you call it, through an acquisition, as Varinder was just raising, or whether it should do it, in a greenfield way. That's one. Secondly, can Pipavav Defence's skills and abilities, in building warships be extended to some of the other naval contracts that may come up in the years to come as defense opens up? And therefore, does it make Pipavav that much more of a compelling buy?
Yeah, so if I take your first question, yes, an acquisition always makes sense. This is the same thing in aerospace as well, because it's just so difficult to first acquire land, then your dry docks, when all the manufacturing facilities where you fabricate the parts of the ship and then assemble it in the dry dock, then do the testing. It's just too difficult to do that. It's going to take a long time. And number two, then the certifications, clearances, approvals. It's just too much to ask for. The acquisition route, given the fact that this new government is pro-reform and they've been talking about FDI reform, speeding up the defense acquisition proposals, I think time is at a premium, and that's why probably an acquisition will make more sense. Coming back to Pipavav, yes, they have fantastic facilities. Whosoever visited that has corroborated that, and I guess that gives them a lot of flexibility to bring in other kinds of ships also. The current shipyards like Masgaon, Hindustan Shipyard in Cochin, Garden Reach in Calcutta, Cochin Shipyard, all of them are flush with orders, and there is since the demand might be more than supply, there is a great play available for the private sector one. So I see a great future for Pipavav.
Is there any other play in this space, in the naval space, that might appeal to M&M or any other acquirer besides Pipavav? So does Pipavav have competition?
As I said, it's very difficult to set up something afresh. There's a lot
not
of
greenfield.
talk,
Brownfield. Amber, is there any other acquisition available, any other company that does the kind of work that Pipavav does that could also make for an interesting target?
Not that we know of. No, there are not too many. Not too many opportunities in India.
So you started the interview by talking about how buzzing this space is when it comes to deal talk. Can you give us a list of all the deals that are likely to happen in the next 1 year?
I wish I had that. I would be a very rich man if I did. But what we're seeing is that the speed at which the orders are being cleared, almost $19 to $20 billion worth of programs have already been approved by the previous defense minister, Mr. Jetli, and now the current one over the last just 7-8 months. And it's not that these are new proposals. These proposals have been in the files for the last several years. So things are moving. At the same time, one also has to take a balanced view. Like in this year, most of the defense acquisition funds have gone for previous committed liabilities. These are previous programs in the previous years, so there's not much left from this year. Hopefully next year, as the economy kicks in, we'll have more and more funds left for the finance minister to hand over to the defense minister, and that's when we see more programs coming up. But to give numbers or names are very difficult, but on both fighter jets, so we have the MMRCA deal, on helicopters, the light utility helicopters, advanced light helicopters, the military combat helicopters, UAVs, on missiles, the tank modernization, on the ships, submarines. It's a huge list.
Varinder, this side, just wanted to ask one question. Is there any precedence in terms of any benchmark in a naval kind of a deal, locally or globally, which we can compare, if at all this deal happens going ahead?
I doubt so, because commercial is very different from military. Military is all program-based, project-based, tender-based. So it all depends on the size of the tender, the duration, the sort of competition they'll face, the amount of indigenization, and hence leading to the margins. And based on the margins, we work backwards on a DCF basis and work out the valuation. So as far as my knowledge goes, I don't think as against a commercial shipbuilding unit, we can do a multiplier here in case of defense shipbuilding.
Okay, but you sort of laid out a long list of potential orders, or maybe at least previous orders that are finally getting fulfilled, or budgets that are getting spent, etc. You know, that makes this space such an active, vibrant space finally. How do we gauge which companies are best positioned, you know, to benefit from this? Who will be the best in class in defense? Where some of these deals will take place, either in terms of the specific skill sets or spaces like naval or, you know, otherwise? How does one understand the kind of activity that will take place over the next couple of years here?
See, unfortunately, I can't take very specific names, but I mean, the names are all well known. There are about 4 or 5 very large companies. These are the established manufacturing companies in India who have been in the defense space for almost 30 to 40 years. They're also supplying to the private public sector, HAL, BEL, on ISRO on the space program as well. So I guess as long as the FDI remains at 49% or below, these ones would be the first ones will be who will be approached by the global players. And a lot of conversations are happening as we speak. Now, if the FDI reforms happen and we take it to 51 or 74%, as KPMG has been pushing for 74%, if that happens, then we'll see a lot of opportunities opening up for the other large Indian corporates who are also equally keen. And behind the scenes, let me just divulge a secret, they're all under pressure from the Indian government to now take risks, come out of their sort of, I would say, disinterest and punt on the defense sector. So I guess there will be a very wider pool. One last point is about the offsets. The current way the defense offsets are designed, once a Boeing or an Airbus or a Lockheed locks in its offset partners at the time of the bidding, maybe say 5 or 6 years back, you don't have the flexibility to change the offset partner. Now that, I mean, a lot of people allege that there is a vested interest there, but if the global players are allowed to change their offset partners and the suppliers, like in any other field, we can see many more opportunities opening up for other companies who are hitherto not involved in defense. Menka?
So what you're suggesting, Amber, is that in the next 12 to 24 months, what we are likely to see is FDI transactions in terms of deal activities, let's say for L&T Defence, if at all, or M&M Defence, or the 3-4 big ones that you spoke of, maybe even Bharat Forge, etc. It's only thereafter that you might see some M&A activity, some larger Indian defence companies with foreign partners wanting to buy out some smaller defense companies. So M&M-Pipavav, if it happens, is not a harbinger of a bunch of deals in the next 12-14 months.
It is, but Menika, at the end of the day, one also has to distinguish between a hype cycle and a real cycle. So the hype will be dispelled only when we actually see, as KPMG believes, FDI going up to 74%. That will open the floodgates, because we cannot expect any global technology to come to India, especially in a very sensitive defense sector, without complete ownership and control of the foreign majors. And when you talk about M&A, let's not forget, not just the M&A in India, but there are a lot of buzz going around, a lot of trips being made to Europe and US, wherein Indian companies who are desperate to get into the game, who have hitherto stayed out because of whatever reasons, they are engaged in a lot of conversations in the Boeing, Lockheed, the BAE, or the Airbus supply chain, trying to acquire companies which especially have a dual use portfolio, in the sense just buying out a company which might be supplying sensitive defense technology like stealth or missiles or the firing system. That might be difficult, but there are lots of companies which are making, say, the aerospace parts, the aero engine parts. Now those parts have a dual usage. It helps you de-risk between your defense orders which are lumpy versus commercial aerospace orders which are spread out over time, and that is of key interest. So a lot of that conversation is happening. It's a matter of time before FDI is increased, sooner or later. The earlier it happens, the better, and we'll see more M&A activities, both in India as well as in Europe and US.
You've hesitated to answer my previous question, Amber, but I'll ask this one to you again. Amongst, let's say, L&T, Bharat Forge, today Reliance Infra announced the setting up of 3 new subsidiaries, M&M. Can you give us a sense of who you think are the top 3-4 companies that are best positioned to take advantage of all this activity that you've pointed out to us in the last few minutes?
Menka, unfortunately, I'll repeat the same answer. If you want me to come again here as a KPMG employee, I'm not authorized.
All right. Not about to jeopardize your job. Thank you, Amber. Thank you for the insights, and we hope to have you back.